Greetings everybody, I trust you're well. We're now having a look at Ger40 and we're on the monthly chart as you guys can see. And just to somewhat recap, the last time we spoke about this particular chart, we spoke about this level over here. If you guys recall, I had mentioned that this level over here is a very strong level of resistance, as we've had multiple rejections at that point, as you guys can see. And I said that should price in the future head back to this level, at this level is where we would look for potential selling opportunities. Another reason why I say so is because of this head and shoulders pattern that may possibly occur in that region. Hence I'm saying that at this point we should potentially be looking for selling opportunities should price head back to that level, and that is because, as I've said, that would be the formation of a very nice head and shoulders pattern, as you guys can see. And ideally I would love to see price come back to this level, or rather come down to this level to end here. And the reason why I say so is because we have this candlestick over here. It is a bearish candlestick with a very long lower wick, which tells us that at this level over here where this wick ends, there's a lot of liquidity at this point which needs to be triggered by the market. And as we all know by now, liquidity equates to money, right? So I'm just gonna add a structure for that resistance area because it's very, very important at this point in time. So just bear with me guys while I do so. There we go. Right, and then from here what I'm gonna do is head down to the weekly chart, seeing that I don't really see anything else of interest at this point in time. However, before I do so, let me just also mark that liquidity area right at the bottom. It's not important at this point in time, but I'll just mark it just for now. And here we are on the weekly chart of Ger40. Let's have a look. So what do we see guys in regards to the weekly chart of Ger40? Let's have a look. One thing that I do see is that we had at this level a very strong level of resistance, as you guys can see, and that is because price had actually closed below this level, as you guys can see, and it had also given us a very nice M structure, right? However, we saw price coming back to the neckline and pushing past that neckline, right? To add to that, as much as we have this huge M structure over here, we also have a smaller M structure in that range or that region, which is over here, and it's actually an overextended M structure where the first leg is very much higher than the second leg, right? And it has a neckline at this point in time, right? We saw price breaking to the bottom side of that neckline and then heading back to retest that neckline. So we might potentially be getting a reversal at this point. And I know that it seems as if the neckline has been broken to the upside. However, what happens a lot of the time is that price will head up to the perhaps 61.8% Fibonacci retracement level, which could be at this level, and then price may potentially move further down, even though it seems as though the neckline has been violated and it did not hold price, right? Let me just add a neckline to that structure. Let's have a look. Right, there goes our neckline, and let me just also utilize the Fibonacci retracement tool, and let's have a look in terms of whether or not that neckline aligns with any key numbers that we have on the Fib tool. There we go. And as I said guys, let me just redraw that. As I said, we can see that the neckline is here, right, which is the neckline of this overextended M structure over here. And as I said guys, the neckline at this point in time seems as though it's been violated, but what may actually happen is price, because it is now at the 61.8% level at this point, may push further down, which means that the neckline would still be very much valid in my humble opinion, right? So we just need to keep that in the back of our minds, right, as we proceed. Anyway, let's continue. From here, what I'm going to do is head down to the daily chart. Right, here we are on the daily chart. Let's see, what do we see on the daily chart? In fact, before we continue, I'm just going to start off by adding my daily channel. Just bear with me while I do so. So there goes my daily channel, more or less. We just need to ensure that it is pretty much accurate. There we go, right? And let's zoom in and have a look in terms of what's going on. So what do we see on the daily chart? What do we see on the daily chart? Let's have a look. Right, something very interesting is happening in regards to the daily chart, and that is that, remember on the weekly chart we spoke about this overextended M structure over here, which has a neckline at that point, right? As much as we have that, right, we also have an opposing W structure at this point, which has a neckline also in the same region, right? So we have two opposing structures. Number one, we have that overextended M structure, and number two, we have that W structure at the bottom, and they both have necklines in more or less the same area, right? Which makes it very tricky in as far as buying or selling at the zone, which is this level over here, right? So in regards to the daily chart, buying or selling in the zone, I think, is very much tricky, right? Because as I said, we have two structures that have necklines that are at the same area, right? Anyway, let's proceed. Just also remember that I had mentioned that price seems as though it has violated the neckline of this M structure. However, having said that, we know that the 61.8% Fibonacci retracement level is at this point, and I'd said to you guys that we might potentially then see a reversal at that point, right? Anyway, let's proceed. From here, what I'm going to do is head down to the H4 chart. However, before I do so, just keep in the back of your mind that we have a W structure over here. I'm not going to add the neckline of the W structure because I don't want us to get too confused, right? So let's head down to the H4 chart and see how we can get around having two opposing structures that have necklines in more or less the same area. So there we go, right? There we go. So what do we see, guys, in regards to the H4 chart of DAX? In fact, before we proceed, I'm going to start off by adding my H4 channel. Let's have a look. Just bear with me, guys, while I add my H4 channel, and I would add it in this manner, more or less. Let's see. There we go. There goes our H4 channel, more or less. Right, there we go. So what do we see, guys, in regards to the H4 chart of DAX 40? Just to recap, just remember that in regards to the higher time frames, we have spoken about how we have this huge M structure over here, as well as this huge W structure over here, and they both have necklines at more or less the same area. And I said to you guys that it's a bit tricky in as far as buying or selling in the zone. Just also remember that the neckline of this M structure seems to be violated. However, the 61.8% Fibonacci retracement level is at this point, and I said to you guys that we might potentially see price move further down, right? And if you look closely, actually, price also has what seems to be a W structure at this point, right? And as I had said, the fib level of 61.8 is at that level, and what may actually happen is, as much as we have this W structure over here, which has a neckline which has been broken at that point, what may actually happen is that price may at this level move further down to give us another smaller M formation at this point in time, right? I hope that makes sense. So what I'm doing is at this point showing you guys some of the possible outcomes that we may experience in relation to Ger40. However, having said all that, at this point in time, it's a bit risky in as far as buying or selling goes, right? At this point in time, I would not look for any, or rather, I would not be buying or selling. I would wait for price to head to this level, and at that level, I might potentially look for selling opportunities. And that is because, if I can just zoom out a bit, that is because remember we have this huge M structure which has a neckline at that point. The neckline has been, or rather seems as though it's been violated. However, the 61.8% Fibonacci retracement level is at that point, and should price, let me just zoom in a bit, should price where we have that 61.8% Fibonacci retracement level give me a rejection candlestick over there or a reversal candlestick over here, I might potentially be looking for a selling opportunity. And that is because also price would be giving us what seems to be an M structure. Can you guys see that? And should I sell at this point over here, right, where I would have a double top, I would say that my take profit should be, let me just zoom out a bit. Let's see, let me go back to the H4 chart. I would say that my take profit zone should be this level over here. Why do I say this level? That is because that's where the formation started, in my humble opinion. Because if we were to do this, right, that's where my take profit would be, right? And this level over here is also a very strong level of support, as you guys can see, right? So my take profit zone would be somewhere around this level over here, right? That is if I do indeed sell at this point, right? Having said all this, guys, I'm not saying that should price reach this point that we should be selling. I'm saying at this point I would be looking for further reasons and further confluence rather as to why I should be selling. And if the setup aligns with my criteria, I will then sell for sure, and my take profit will be the zone over here, right? The zone over here. So that is my analysis in as far as DAX 40 goes, and peace out, guys.